Apple's China supply chains are shifting to India, and that really seems to be a nod to the continuation of the US and China butting heads. That's going to be, or continue to be, problematic from an export demand point of view for China, is it not?
Yes, I think one of the interesting aspects of this moment for China and for kind of the question over what the future global trading landscape and global supply chain landscape will look like is, I would have said, even maybe a year ago, you essentially see decoupling everywhere except in trade and investment statistics. And particularly around supply chain issues, it was much more rhetoric than reality. And the lived experience for many companies in 2022 was that it shifted from rhetoric, kind of boardroom conversation, oh, we need to think about this, we need to think about risk resilience, to, you know what, maybe we need to start taking some actions. And Apple, of course, being one that garnered many headlines because they've really heavily invested, of course, in being central with their supply chain in China. The challenge is that China is not easily replaced in global supply chains. In some sense, it's too central to decouple. And so I think even that's the wrong word when we think about particularly supply chains. It's de-risking. And that's not just geopolitical issues. There are other pressures there as well. But, I would caution this being an either-or conversation. I think it's both and, that we'll probably see not, like Apple or other companies, that it's China and maybe China plus one, not kind of abandoning the China market. It's simply too large, too attractive, too central, and too efficient in terms of supply chain. If you try and compare China with kind of the rest of Southeast Asia or ASEAN companies, the figures kind of stack up. But they're not a monolith, right? There's a lot of vibrancy and diversity among those economies, which is great. It's one of their strengths, but they can't easily replace China.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.